Sadia, I'm over you, I'm under you, I'm around you. Sam wakes up in the morning, he looks over and he just sees Satya. It doesn't matter who's next to him. It's just Satya's there, just staring at him, eyes wide open.
What a great meme.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
You know a lot about what's going on, Moorhead?
I think we do.
Welcome back to the 6-5 Pod. This is Pat and Dan show. We're at episode 270. It's the end of the week. I know it's Monday for all of you, but it is the best hour of the week for me. Daniel, how are you doing, my friend?
As good as I look. I got raccoon eyes. It's a little red in here. Been doing a lot of tanning lately, Pat.
I'm just
Gym
glad you get
tan.
out there. I'm just glad you get out there into the sun. You get to work like 2 or 3 hours a day, and then lower your stress. I get it.
Well, I run a culture of performance. So the performance here is we all compete to see who can take the most PTO. I've got some real winners. Some actually take more days off than they work, and we're still crushing it. So, around here, it's all about the culture. And so I've been taking a lot of time off, Pat. A lot of time at the pool. Clearly, wearing my shades. That's why I'm so red. But listen, I come back for the 1 hour each week that really matters, and that 1 hour is with you here on this podcast. Best hour, hopefully for all of you as well.
There we go. But Dan, I love the sarcasm. It's pretty awesome. And I think at one point I was texting you, "Hey, bestie, where are you? I need somebody to be miserable with."
That did happen. And then I called you back and said, "Now I need you to be
Yes, I know. No, we are. Some people confuse us as, it's weird. Like we're so different in how we think and what we do, but we are aligned on some certain entities. One of this is crushing it, working hard, aggressiveness. Losing is unacceptable and taken personally. But how the workout going, Dan? You had a bum shoulder when you were out. Are you back? Are you fully back?
I am as back as I can be. I am fully committed to trying to hurt myself again. So all in a series of a single week, I, tried to play soccer with my son and I fell on my shoulder. That created some long-term pain, but that's okay. And then I tried to play again. I was kind of like straddling the shoulder and I was running around playing and I pulled a hamstring. This, by the way, is part of just being old. Like I am pretty consistent with fitness, I'm on it, but like just getting old sucks. I iced it, Pat. I shot a little BPC in there. BPC is a good thing, everybody. Check it out. 157. It's the best. Add TB. It's even better. It's not health advice. So do your own research. And so I got better pretty quickly. Today I sprinted again. So I actually was able to do sprints up at 4 a.m., staring at the ceiling, and I was in the gym by 5. Doing my sprints by 6 and back in my chair by 7, plowing some protein shakes and green tea. So, the health thing's going a lot better than other things right now. I got to be candid. Like the health thing is in line. And thank you, by the way, for the motivation. Because like a year ago, I was a pretty, I was not as good looking as I am now. What did you call me yesterday? Unrecognizable? You told me
Yeah. I literally, you sent me that the naked picture of you.
I wasn't fully late. I was just everyone out there who already suspicious of things like it wasn't fully. There was maybe some abs showing though. There might have been some abs or flabs. You'll have to be the verdict of whether it was what.
Well, hey, I'm glad you asked about me.
Take that crap though. People are going to take it seriously. They're going to be like Dan and Pat are sending each other naked photos. It's like
maybe that's what we want to portray out there. So, anyways, so I really do appreciate you asking me how I'm doing.
How you doing, Pat?
Yeah.
Well, wait. We were doing role reverse. It's all about me.
No, I know, but until it's about me.
How's your fitness, Pat? Are you jacked? Are you totally jacked again?
Well, I'm 7 days in from surgery, and I wasn't supposed to lift anything for 2 weeks. It still aches, I got to admit, but I stopped taking even acetaminophen 3 days ago. My HRV is absolutely in the dumps. As a percentage to normal, it was down to 23%, which is like, don't move, don't do anything. I was on a business trip in Kansas City when that thing hit. Right now, I think I'm at 50%, which is, kind of iffy, but I was rocking the 100% for a while. My physiological stress was super high as I was healing. But no, I'm back, and I'm gonna hit the treadmill on an incline, do what I can do, and pick myself up. And I see my doctor a week from today, and we're gonna talk about whether I can what kind of weights I can start hitting. So yeah, I'm not back, but I feel incredibly improved here. So this is a tech show. Let's dive into the tech. So we've got some great things. We're going to decode from you some big news items that came out. We're going to hit the flip, where we essentially uh, argue the polar opposite ends of very nuanced issues that don't have polar opposite answers. And then we're going to hit big market week. I mean, if it's not just the earnings, but it's tariffs, if it's continued discussions about interest rates. So we're gonna have to see. So let's dive into the decode. All right, Dan. EU plans a 40 billion euro AI chip purchase in U.S. trade agreement. Well, wait a second. I didn't think the U.S. even made chips. What's going on here?
Yeah. Can I just really quickly say, because, on it's Friday, the 1st of August, so welcome to the new month. Trump came out with a big old list of tariffs last night, as if this was surprising and the market's dumping. You've got, I just want to call a couple of things out that I don't know if we're going to fully cover. You've got Fed Waller, Fed board member Waller and Jay Powell fighting in public. The jobs data sucks. So just important to point that out. But the market, as we are speaking right now, is doing a little nosedive. Is it a buy opportunity? Anyways, but last week, right, as we headed into this week, there was this Europe deal. There's supposedly, I think, a Taiwan deal got done. A Japan deal was nearing in. India deal, at least a percentage with India has been disclosed. But, one of the big things about the EU agreement was this big commitment to buy chips. And, this was kind of interesting to me because it's like, were they not going to buy them anyway? Is this just kind of padding the victory here? Like, that Europe's got more like data stringency than any other part of the world. They, of course, are going to have to set up sovereign clouds. We've heard Jensen talk about massive deals in Europe where they were going to buy a ton of Nvidia GPUs because every country, in order to stay within the data protection rights that they've created and the privacy rights that they've created, will need to have complete control and sovereignty of their infrastructure in the region. So this is going to lead to them buying chips. This is going to lead to their businesses buying chips. This is going to lead to the cloud providers adding zones and adding more chips. So I think it's great. I think to some extent, though, this was a little bit of a padding on a victory lap that was already happening on something that, maybe it would have been more odd if they said Europe decides not to buy chips. And the fact that they're buying them from the US, it's as if there's another option. There is no other option. Even China doesn't want their own chips right now. And yes, I'm being a little facetious. It won't actually end up that way. But there is a reason that Jensen had to expand his H20 manufacturing because China wants a heck of a lot of H20 chips because they really want Nvidia.
Yeah, I can't believe this is our first topic, but it is.
That's why that's why I gave the little leader, because there's a couple other things going on. I think the other stuff seems to be ripping today.
Yeah, this one looks like nonsense to me. The only thing that and we had a nonsense topic last week. I forget what it was, but as I was going through, I'm like, why is this even a topic? Anyways,
big on nonsense. Me.
Well,
I love
by the way,
word.
the only thing I could come up with, if I'm inventing something, Daniel, was you have Intel, who's manufacturing server chips in the United States, and then you had AMD, who is manufacturing their chips in Taiwan. That was the only thing I could come up with, right? There's no GPUs that are done in the United States. There's no high-speed networking chips that are done in the United States. there was a lot of analog stuff, right, done at, let's say, global foundries. There's a lot of memory that Micron does, but like they weren't going to buy it in the first place.
Yeah.
Anyways, this is nonsense.
Yeah.
Let's move on
But
to
I
this.
mean, it was a nice padding on the victory lap, right? I mean, you and I love a victory lap. It's like they're going to buy chips. It's like no.
Yeah, I know.
Everybody's buying chips. Have you seen this week? Anyway,
Exactly. By the way, that the article came out in investing.com. So, okay, let's move to a real topic here that actually has meat, and that is that Palo Alto is making a play for CyberArk, a $25 billion deal. You and I sat down with the CEO of Palo Alto back at I actually forget which conference that was in was San Francisco. And I got to tell you, he operates at a different clock speed, and he is dynamic, and he wants to rule the world. We also met with their founder in Spain at MWC, and really got his feedback. But essentially, if it's not cloud-based security, then it's shite. Okay, this is what Palo Alto does. The control plane being the cloud, the thesis being things move so quickly in the age of AI, you have to be doing this in the cloud. But what does CyberArk bring? Well, it brings identity management. It's called PAM, Privileged Access Management, and identity management to their portfolio of end-to-end cybersecurity. And it's funny, Dan. You and I were asking the founder, I think at MWC, well, what about all this security stuff that's maybe on device? And he's still stuck to his gun. And we talked a little bit about identity management here. So, anyways, this would make Palo Alto one of the biggest the biggest security pure plays out there, but even bigger than what Microsoft brings to the table.
yeah. I mean, you've got an industry with tons of fragmentation. Not necessarily a clear winner. It's a fast grower. It's one of the biggest adjacencies to AI itself. As AI scales, security will scale. There's kind of this RSA type of part. And then, of course, the quantum part that's going to come into play, quantum encryption, because in the next few years, we're going to probably break RSA. And then Bitcoin will be vulnerable. Our good friend Niccolo will tell you all about that. And then, of course, that's what he wants at INQ, for them to break it so they can sell more quantum networking and security. But anyways, the netpad is it's an opportunity. I mean, look, this industry just does not have a dominant player. It's Microsoft. Microsoft is the dominant player, but it's like there's not a pure play dominant player. Palo Alto is pretty much as close as it comes, and as he told us when we spent time with Nikesh is that he's very creative. And so, we heard last week it was Sentinel-1. A week later, it was CyberArk. By the way, CyberArk was number 7 on the Futurum Cyber 7, and Palo Alto was number 3. And so, coming together, we may have a new opportunity, at least number 2, to move ahead of CrowdStrike. But this was an area that Palo doesn't do, so it's almost purely accretive to their business, and so makes a ton of sense. By the way, the street absolutely beat the crap out of Palo Alto stock for this. They lost more market cap than the deal size in terms of the share, but the CyberArk stock, people loved it. So, we know that that's generally kind of the reaction is not usually this harsh. But having said that, I think Palo knows what it's doing. I think it's a good move. And I think sort of consolidating for scale is important right now because, with Microsoft and obviously Google with Wiz, these big companies are not going to just leave this market untapped. They are going to try to bring it all in-house and make it part of the Amazon and the Google and the Microsoft cloud, because why would you want to have a point solution? So Palo needs to be so entrenched, so inundated, so diversified, and so specialized that people are like, no, we need Microsoft Azure for all this, but we want Palo for all that. And so he needs to keep building scale. I think it's a good deal. I actually think if you like Palo after that beat down on the stock, maybe now is a good time to enter because it definitely took it, but it still trades it. I know we're not doing buys, and you know me, I love talking about this crap, but it's
Yeah.
like it still actually trades at a really high premium. So just kind of watch for that. But I like security.
Yeah, this whole consolidation mode really started off with Cisco, and then it went to Microsoft, and now Palo Alto Network. And fundamentally, enterprise IT, what they found themselves in is they realized that even if you're, one-off pure play security company that does one thing well, the time it takes you to integrate that into your end-to-end security portfolio, by the time you got it to work, it was too late, and it didn't end up being the best security. So enterprise is looking for less vendors to deal with. Hey, let's move into, I mean, my gosh, we're 16 minutes into the podcast and we haven't even talked about Nvidia yet. A
Oh, no,
lot
I
of
did it like 3 times, dude. I mean,
Oh, okay.
no, remember I kept mentioning Jensen said this because I'm such a dork. I can't help, and I got to start quoting you more.
Oh, I know
But you
you're
on
an
TV
Nvidia.
yesterday? Didn't I see you?
Yeah, you're an Nvidia pumper. I get it. And it's such a hard
You just
call
call
to
me
make on
plump.
Nvidia.
You just call me plump. It's the way I'm sitting that makes me look like I have boobs. It's
Pump, not plump.
plump. Okay, I thought you
Yeah,
said
my
I
my
thought you said I
nose
look really. I thought
my
you said I
nose
look
is stuffed up.
plump.
All right,
Oh,
let's go into a topic literally everybody wants to talk about, and that's Nvidia, right? Um, we got 300,000 H20 chips, but we've got China calling Nvidia on the carpet. What's going on here? I mean, is this really bad news? Really good news?
FUD. Another stupid topic that isn't stupid. Like, because I kind of mentioned this on the EU stuff. Like, everyone's buying H20 demand is through the roof. Huawei, is brute forcing it, but is still behind. But this could be a little bit of China pulling a little lever on national security, pulling a little lever on, they're actually seeing that like the Ascend, the Matrix isn't quite winning. Like all this, it's like they wanted access, but it's like I don't know that they wanted it to be quite this good. It's like this is better than we thought because it's all, in my opinion, just like China's doing with EVs, it's all about a bridge to China. Like they want access to what they need to keep moving, but they also kind of ultimately, eventually, will want people to move to their stuff. And even different than like handsets with Apple and cars, this is a bigger issue for them long term. That they're going to build this dependence. So we're diffusing our tech. Their researchers love it. It's not just H20s, but we did talk about kind of what are some of the things that could be required that cause issues. I kind of tweeted something along the lines, and you and I have said the same thing about like kind of know your customer. There could be a time down the line where China doesn't really want anyone to know where these H20s or any other chips from Nvidia or AMD are. We obviously know that there's still some intent within this AI strategy from the White House to not feed China our best technology, which again, the H20 is not our best technology. But let's be very clear, H20 is not the only NVIDIA chip getting into China right now. So there's a lot going on with this. I think this is just the continued game of chess that's being played with everything from the critical mineral and APIs for pharmacy, and of course AI is our lever. So AI is our lever. They want to obviously make sure that they keep us in check wherever they can.
I got two things to somewhat add to this. So, in Nvidia having to build 300,000 extra chips on top of the million that were supposedly there before, says that even detuned Nvidia chips are in higher demand than Huawei Ascend chips. And I think there's 2 to 3 million of those Ascend chips that are available, but I just think it's amazing, just the pull for this type of chip. And then on the back door, I just think this is complete and utter nonsense, because if this were the case, the U.S. government would have been allowing H20s to be shipped over by the truckloads at a 50% discount paid by the CIA to be able to do this. And maybe there is a lot of software that NVIDIA does do, like Dynamo, right? Like data management software, like that does update like any other reasonable software. And guess what? Those GPU blocks also have firmware that need to be updated. So I don't know. If there was a backdoor, we would have been sending them over by the truckload. Therefore, my logic, I don't think there's a backdoor.
Well, just you and I'll agree. The insatiable demand is indicative of just how much absolute BS and FUD we were being fed in different commentary, press media. And I'm just glad guys like you are here to dispel stupidity, because if they weren't, there'd have been a lot of people probably on the wrong side of a number of various risky positions, including shorting Nvidia clowns. It's just a terrible idea.
I don't know, Bessie. It's not just me. So this is what the Decode is about. But you're as big or bigger truth teller as
I
me.
just, someone told me, they said to me, Pat, they said, I like your Twitter now. They said, you're like, that's the real you. And I said, yeah, I brought the snark. I said, I've just hit the point. I just don't care anymore. Like I used to really care. I don't. I'm thankful for that. Maybe it's like you hit a certain age, like 44 was my moment where I just, I had some guy, because I showed a picture of me like training and staring at myself. And I said, my own competition. The guy's like, sent a picture, says, you're gay.
That's so good.
So they say. I don't know, but like, I used to think like, I don't want anyone to say something mean to me. It's like, the stuff they say in public, I just can't imagine what they say when I'm not around.
I mean, that stuff used to bother you, and I'm so glad it doesn't anymore. And I'll admit it gets me. It's depending on everything else that's going on, right? Like if everything sucks, business, personal, physical, and then that hits, it's like
extra sensitivity.
Exactly. Hey, let's move into our next topic here if we can. Although, I mean, I would camp out on this all day long. Groq with a Q, that both you and I are on the cap table early on this one, is going for another $600 million in funding that supposedly will put the valuation to about $6 billion. By the way, a little background. So first of all, Groq, their founder, Jonathan Ross, is the essentially one of the founders of the TPU that is arguably at Google the most successful non-GPU AI accelerator on the planet that has been brought together. And they have data centers in the U.S. and Canada and Saudi Arabia and now Europe, I think. And what they did is, which takes a ton of money, is they're not just building the chips. They had to build an entire solution, and then they went to as a service, basically Groq as a service. And they're doing this all currently with a 14 nanometer chip that's fabbed out of global foundries, and that's compared to Nvidia, and AMD that are 4 nanometer ish on the silicon. So that, with the performance and the throughput that they're getting out of that and the power is pretty impressive. Now, you have to string together a lot of Groq servers to be able to get the performance to do a large model, right? Because it has a minimal amount, I think it's 200, 300 megabytes of SRAM that's actually on the chip. And you have to fit the entire model size into that. Now, the way you program it is do different weightings, which means you don't have to have as much as memory as you would in HBM sitting on a on a GPU, but it is a more efficient approach. So very interesting. You and I have debated the whole ASIC versus GPU. What happens to this? If you look at the CoWoS loadings that are rumored out there, folks like Morgan Stanley and JPM, it still looks like, let me see, AMD I think is around 11% market share. The TPU is at 15% market share. And then kind of the odds and ends of kind of the Samba Novas, the Cerebras, and the Groqs combined, I think, are around 5%, 2 to 5%. And then Nvidia has everything else. So yeah, very interesting moment here, particularly as we're not moving, still doing a ton of training, but as we move to actually having to run the workloads.
Yeah, I don't have a lot to add here. Got a little lucky on this one on a personal anecdote because what they were when we actually came in and worked and got on the cap table was a different thing. They thought they were building a custom training / inference chip. Quickly discovered that wasn't the right path. Went all in on inference. Have won some great deals in Canada, in the Middle East. Really became a full-on cloud. They're basically an inference cloud. Is sort of a CoreWeave kind of thing, but just for inference, and have been very kind of like selective, specialized for those that need tons of horsepower and tons of low latency. Definitely a fan of Jonathan. He's a multi-timer on 6.5, so we've had him a number of times. And their new COO, Sonny Madra, is great. He's a guy I try. I think you probably track him too on social. You probably met him, by the way, when you were.
Yeah, I met him for the first time in Washington D.C. at the AI event.
He definitely, when they made that acquisition, he came in, everything changed. It was a really good strategy. Like when he and Jonathan got together, because I think they bring a really complementary skill set. He's a killer though. Like he
is an absolute killer, and he's been very good. I totally agree.
So good stuff. Let's go 6X, Pat. It's a six bagger.
Let's go 6-banger at this point.
So when you're sad about you're pulling your pockets out and they're empty, and then remember you got a 6-bagger in Groq.
I don't know. Last work for equity deal I did, I got a check for $3,400 that I split with somebody.
Yeah, it was pretty good. I'm sure that you probably put was that about a 10-minute block of time that you should have committed to on the average of what you charge per hour?
Yeah, it's 45 minutes. So no, I do one-off consulting between 2K and 5K. So yeah, it's pretty sad. By the way, it's better than me. I mean, I invested $225,000 in a SPAC that was in that horrible in-between period between actually coming out and not happening at all. And I lost $250,000 in that. So yeah, wah, wah.
Wah, wah. Well, Pat, I guess better to only have lost that than more. I mean,
yeah, let's not forget.
I remember I wanted in on that deal, so I'm really glad you didn't make any intros right away.
Well, let's not forget about. I think I lost $150,000 on an.
What were those things? Token.
I don't even know. Some, basically tokens, art, nonsense. Anyways,
you were gonna sell what was it, like the monkey, the ape, the bored ape? You were going to be in the business of bored apes.
Exactly. I thought it was like a sure win situation.
Wasn't that what every live streamer became? Was some sort of crypto, or what do they call the non-fungible NFTs? They all became NFT people, and now they're all Bitcoin laser eye people or whatever.
Yeah.
Right,
anyways, this is why you never ever take anything I say as investment advice. You do not want to be me, okay? Because all I do is just lose money.
Yeah, terrible investor.
Nonsense.
Hey, great guy.
Microsoft news, a lot of stuff going on. A lot of talks about OpenAI agreement. Are they going to let them turn into a full for-profit? Right? We've got Copilot mode and Edge, and Microsoft SharePoint got hijacked.
Gosh, Microsoft has so much leverage on OpenAI. It's ridiculous. Like, Satya, I'm over you, I'm under you, I'm around you. Sam wakes up in the morning, he looks over and he just sees Satya. It doesn't matter who's next to him. It's just Satya's there, just staring at him, eyes wide open.
What a great meme. It's probably a meme, isn't it?
By the way, do you see my funny meme? You know that meme of the guy like with the girl looking back and kind of whistling? It was really popular, like he looks back and it's, and anyways, it was all over the internet. I shared it. Here, let me see if I can I'll show it in a minute. But I shared about Apple, like all the Apple investors looking back at the Meta investors yesterday. Like But
Oh no, I saw that. Yeah. That was
this
so
one,
funny.
this one
Yes.
it was really popular in its
Yeah.
time. But like, so I put a little hat, I put the Apple ticker on the girlfriend and the Meta ticker on the one he was checking out. But anyways, that was a lot of fun. But look, I mean, Satya needs to get control. There's this AGI moment, which is sort of indiscernible of what that even means, where supposedly OpenAI kind of Microsoft loses control. And obviously, with all the money being poured in and how fast Sam is going and how ambitious / diabolical he is, I think Satya wants to make sure he reels him in and gets control and doesn't lose, because Microsoft has a great growth, and we'll talk about that later. But like, Microsoft's also in this interesting juxtaposition, like Gemini and Google and TPU. They built this whole stack. They're like self-sufficient, and if Nvidia cut them at the knees tomorrow, their business impact would be different. Amazon's going down a very similar path to them. Microsoft has this great growth rate, but they are sort of like kind of doing the best job of selling other people's innovation. Meaning they're selling Copilot, which is based on OpenAI. They're selling mostly, they're the biggest capex spenders on Blackwell right now, and selling Nvidia. They built a ton of capacity, which, by the way, part of the reason AWS was down was capacity. They're down on constrained on capacity and energy and chips. So, I'll touch this one. I'll pass it back to you for the others, Pat. But like, I think Satya's got to work the best deal to make sure that he doesn't lose access or the proprietary nature of all these solutions they've built, because as of right now, they don't have a model. And, I mean, they have some small models, but they don't have a big foundational frontier type of model. And so this is like critical that they get this right. But it also, like, they have the 10 billion in, and it's worth like 160 now. So Satya is like 16 times the revenue and the investment while also getting access to all this tech. It'll probably double again. So once he lets the chains free, I mean, Figma's $60 billion. OpenAI would probably be like $1 trillion out the gate. Which, by the way, I know we didn't talk about Figma, but that is an absolute nonsense valuation for a company that Cursor could basically do the same thing now. Like, build me like Cursor and an LLM. I don't know. I love that these things happen. I just guess I'm being bitter because I'm not in on it. So
There we go. Instead, I'm buying crypto monkeys and SPACs
monkeys.
and SPACs that never happened.
What a terrible bunch of investments you made. I'm kidding.
God, I can't believe we have bulls and bears. Anyways, we'll get there. Hey, the only thing I want to add on this, on the Microsoft thing, is SharePoint and Chinese hackers. So a couple fact checking elements I want to do on here. So first of all, cloud-based SharePoint in Microsoft 365 wasn't impacted at all. Okay, it's the on-premises SharePoint that was, and namely the unpatched ones, older ones that hadn't been updated in a long time, were the ones that were targeted. And within a few days of these breaches coming out, Microsoft issued a patch that's in accordance with its new SFI protocols. And net, Microsoft met its 90-day SLA. Right, the issue was identified May 16th. Patch was available 3 weeks later. And now, after the patches, Microsoft identified new exploits with a new patch came out on July 19th. And even in the interim, a lot of these anti-malwares, 85% of these were blocked by Microsoft technologies. So net is patch your systems immediately. If they're on-prem, don't wait. If you somehow, for some reason, can't find a way to operationalize this, you really should consider moving this workload to the cloud, but also understanding the pros and cons of doing that. I think this is another instance where the press kind of grabbed onto a story and ran in a certain direction. But yeah, just trying to decode this for you. All right, buddy. We've got 26 minutes left. Hopefully you can tell your crew that you're going to be late. Let's go into, I don't know if this is probably my favorite topic, because it pits Dan against Pat on the flip, where we come in and take polar opposite positions on very nuanced topics, even if we believe it or not.
Simulation.
And this week, we're going to be debating and talking about, is Intel threatening not to do 14A Foundry without an upfront CapEx commitment from a customer? Is this a brilliant move or a boneheaded view? Let's roll the dice.
Flip the coin, Moorhead, not roll the dice. It's a freaking coin.
I got you. Coin.
By the way, the only competition I have, this guy.
Snake Eyes. That's what I was thinking about, Dan. You and Snake Eyes and then the dice. All right. I'm going to be arguing that Intel threatening to not do 14A Foundry without an upfront commitment is a brilliant move. Dan, Lip-Bu-Tan, the ultimate negotiator, pulls a move very similar to what Qualcomm and Qualcomm and Broadcom did with Hawk Tan. So, what did Hawk do with Apple? Apple was waffling on buying Bluetooth and Wi-Fi, and then it came out that he said, well, if we can't do this, it's not a good business. We're just going to shut it down. Which, I don't know, a couple weeks later, a couple months later, we see an agreement that Broadcom and Apple have come to a long-term agreement on Wi-Fi and Bluetooth. Success. And then Qualcomm, right, with Apple selectively leaking out, right? It's doing its own modem chips, which it is. We're going to get there. We're going to get there in a year. Oh, wait, I mean 2 years. I mean 3. I mean 4. I mean 7, right? And Cristiano called them on that and basically floated that said, we may not be even doing a thin modem for Apple in the time frame we all know that Apple needed the modem. And then shockingly, right, we had a licensing agreement and a modem agreement that was long term. So it totally worked. So this is essentially that. And what I want to peel apart is in reality, this should scare the heck out of Nvidia, AMD, Apple, and Qualcomm, and Broadcom, and Marvell. Because if Intel doesn't do this, we will see TSMC prices and profits, profit on a percentage and profit on a dollar, absolutely skyrocket. And they're just not thinking about that being a reality. And I think they're looking for somebody else to do it. So they want somebody else to go first, because right now what they're looking at is what's right in front of their face, which is opportunity. The other thing is going to be innovation, where if Intel doesn't do 14A Foundry, you have less competitors, less people doing it. It's pretty safe to say you're going to have less innovation. I mean, look at markets where there might be just one player, maybe 1.5 players out there. The geopolitics are immense, and the U.S. government doesn't have a clue about this. Trust me, I've talked to them, and that is, foundries do two things: they create IP and they make chips based on that IP. All of the IP for TSMC foundries is done in Taiwan. All 10,000 of those engineers. CC elucidated that on a conference call. And that was also rung through the Taiwan version of our House and Senate. And therefore, if Taiwan gets invaded and the US gets cut off, we're going to be stuck on whatever the next manufacturing node is, probably without the capabilities to improve on the current nodes. And then TSMC is basically going to be like SMIC is right now, the inability to move stuff forward because of the lack of IP. So I think we will start getting, I'll bet you, Kevin O'Buckley, his phone was ringing off the hook like, well, wait a second, right? And then, if I'm Kevin, I'll be like, hey, you've just been negotiating and using me as a lever to get a lower price with TSMC. So it's time to, buck up or shut up. And I think it's going to be a brilliant move.
Oh, well, I just did a check on my, history, and I don't think that the Chinese or the People's Republic of China or Communist China, whatever we want to call it, has any real claim to Korea. And I did just check, and Elon Musk just committed some of his most important foundry and fabrication to Samsung at 2 nanometer. And so while we're so busy claiming that Taiwan and an invasion would be the end of innovation, we forget that there's another country that is Korea that has a leading edge fab and foundry, and that, yes, has had a little bit of a struggle, but is clearly breaking through by gaining the trust of someone like Elon Musk to build scale on their leading edge node. So yes, there is an argument that the US needs to have its own chip champion. And heck, I may even know someone that's made that argument. But we have diversification. We have work being done with IBM and Rapidus in Japan that can also handle 2 nanometer fabrication. And as far as I know, China doesn't have any claims on the Netherlands. So high NA and EUV will still be available in other markets. And so, sure, yes, Taiwan is the best right now. And yes, there is some risk there. But there are other players, and Intel making such a stake is basically just them putting throwing a white flag out there saying, "Hey, U.S. government, you better back us because we're threatening to leave the market if you don't give us some money, give us some support, and maybe just force the customers that don't actually want to work with us, so that we can actually continue on this path." But it's very simple. The options do expand beyond Taiwan. I'm sorry, Samsung's a more than capable company, and yes, Intel, in its heyday, certainly had the potential to be a foundry. But after this 18A debacle, I doubt customers are confident. I doubt they're going to be investing heavily. And I'm pretty sure that the US isn't going to let China invade Taiwan anyway. So I don't know. Wrong move for me. I think they needed to go do it the right way, build the best node, make it high performance, give the customer no reason to select anyone else, put some pressure back on Taiwan to not be so greedy with their high prices. But if anyone else gets it right, and I think Samsung will, that will be enough to put Taiwan back in check. We will be fine with or without Intel.
Oh, that was good, Dan. And I actually did cite Samsung in my original tweet that got, I think, 17,000 views on it. But yeah, this is a very nuanced issue here, folks. And the other thing I want to point out is that Intel is going to do 14A for its own silicon. There's a lot of extra expense that you need to lay out capacity, right? To even get the all the third-party IP from, let's say, Synopsys and Cadence out there rolling. So,
hey, can I say something just for the record? Because I'm going to get probably a lot of Intel bulls that won't realize and remember this was a simulation, and I'm just doing my awesome debate stuff. But like, I want Intel to be successful. Like, it is very well documented that I would like to see Intel execute. I wanted to see them execute on 18A, and I was very disappointed in how that's all gone down. But 14 was always, you said, it had the mobile. It was more like, this is something you'd been on the record many times talking about, higher likelihood of being able to support mobile SoCs. Certainly gave some more time for very sensitive, high volume, custom type chips that are being done by TSMC. And again, none of these companies, they're all willing to pay the 25% premium to not mess up yield and not mess up performance. So these companies can't afford to get it wrong right now. So that was why it was so interesting with Tesla. But if anyone has that kind of latitude to accept a lower yield, and I absolutely have to imagine, Pat, that Tesla got one heck of a deal, one heck of a commitment for support, for volume. And of course, as Samsung fixes their problems, Tesla's going to get the volume it needs in the future for basically taking this risk, because no one else at this point has been willing to take that risk at any sort of scale.
Yeah, what I'm hearing in the ether is that it was a combo ASIC DRAM and a DRAM deal. So all those robots, all those cars need more memory too.
It's not as good as some of the other ones, but it is still on a 2, which is not something we've heard a lot about from Samsung.
That's right. All right, good discussion. I know you all know I win these things all the time, but Dan,
you won that one? Do you think you won?
You did a really good job there.
That was fun though.
Yeah. All right, folks. Let's go into the bulls and bears. We're going to talk about a bunch of earnings, a ton of tech earnings last week. and also tariffs came up again, and nobody talked about them until yesterday. We were all, jumping around, doing high fives, and of course, the Powell interest rate saga continues. So let's dive in. All right. Hey, in my week ahead video that comes out on Mondays, I'm like, this week's going to be all around about earnings and tech earnings and tariffs. But Dan, really we were doing like happy dances around tech earnings, and then tariffs hit last night at about 10:30. What the heck is going on here?
Yeah, I mean, look, I kind of hit it at the top because I just felt it was more important than whatever that first nonsense topic we had. But Trump kind of did what he said. He just came up with a list and said, "This is what tariffs are going to be." And I think there's been this taco trade that Trump's going to wait and make deals that everyone's happy about because no one. It's like they don't care about the rate as long as they feel it's bilateral. But when Trump starts kind of talking about just applying a tariff to a nation, that's when people get all sensitive. I still think this is a bit of an algorithmic dump. I think August is always a bit of a down period, hit right at the right moment. But Pat, I think overall the trade war is going very well. I just everything is pointing to there might be some inflation in pockets, but it wasn't there weren't inflation before. But at least we're raising revenues and it's not through tax. I don't know about you, but I'd rather be taxed a little bit more with inflation on what I consume than taxed more on money I've made and haven't even had a chance to spend yet.
Yeah, I agree. It's I don't even know if the market is down based on jobs or is it down actually based on tariffs. When I look at tech tariffs, I did a little research on this morning, and it looks like right now. So first of all, most all US AI servers are done in Mexico, and that's already covered by USMCA, zero tax. Chips displays are still sandboxed, right? Haven't been decided, but there's the section 232 that hasn't been decided on yet that could impact in the future. And plus, China got pushed down, got kicked down to August 12th. But for right now, China and Taiwan converted notebooks and converted phones are sandbox. So ironically, right, it's Apple and smartphones that are done in India that are at 25%. I've got 2 or 3 sources that says that it is, and from India, nothing particular from the United States yet, but that would be pretty devastating to Apple. So let's talk about interest rates here. Powell once again got up and essentially said, too much uncertainty about what's going on. Inflation is not where we want it. It's at 4. We want it in the 3-ish zone. And then you saw some interesting folks from the Fed come in and have some conversations about saying it without saying it, that we should reduce interest rates. And, Dan, that does not happen a lot out there. And then we've got this jobs number that hits that was off by a freaking mile. What was it? It was supposed to be a net add of 147,000. I think it came in at 14,000. How the hell can you be off on a factor of 10? How? No idea.
The adjustments on most of the data is pretty palpable. So anyone that pays attention, we read out the numbers, everyone reacts to that, and the market tends to not react very much to adjustments. And so if you actually look at jobs data over a period of time, the adjustments have been revisions down pretty consistently. When they're pumping the economy, they kind of put out data with a margin of error, and then they quietly revise the numbers. It's a great tactic for winning popular because most people don't actually pay attention to the revised number. Pat, look, we've heard about it, we've felt it in the economy, cuts, reductions. AI is impacting jobs right now for sure. High interest rates, lack of but again, overall the economy's been better. So inflation is down, growth has been better, GDP was up. So it's kind of I just think based on how expensive assets are and the fact that our macro strategy is to outgrow inflation, then we need to bring interest down to 1, make debt more serviceable, and 2, stimulate spending. because like people can buy more house, people can buy more cars, people can like. So if we want to stimulate spending, like high rates are a limiter. People don't move. People, especially like housing and stuff, because like so many people are in these low locked-in mortgages from when we were close to 2 or 3%. Like you want to stimulate people to move, you gotta make the rate competitive because nobody wants to get half the house for twice the price. It's like, that's why no one goes to California anymore, right? Half the house, twice the price. Anyway, so that's it.
A lot of tech earnings that we need to grind through here. Let's start off with Amazon. They just crushed it, absolutely crushed it on the quarter, and they had a what was considered a soft guide. There was also some discussion on the conference call that made investors a little bit weary, kind of a doom and gloom in the way that some of the questions were answered here. And my top line here is that this company is absolutely a rocket ship company that is poised for growth. Kuiper, which is the competitor of Starlink, is not even baked in at all. Zero value. The fact, I nailed what the growth was going to be on AWS. It was at 17.5%, which on $125 billion is an absolute monster number. Azure's at 75 billion, and that includes OpenAI. Nothing to take away from Microsoft here, but I just have to point that out. And from a tariff perspective, they on Amazon.com, they seem to have pretty much gotten completely around that. Look at the North American numbers. They're absolutely off the charts, and we can debate whether those were pre-tariff buys. But I think, like what you say, Dan, on Halloween masks and Christmas trees and all the stuff that shows up on my doorstep every day, they seem to have absolutely weathered it so far. Final comment is advertising. 23% growth on a multi-billion-dollar business, third largest digital ad platform on the planet, next to Meta and Google.
Yeah, I mean, you hit most of it. The backlogs are really interesting debate because their growth is so much slower than Azure and Google. And so I did the calculation, 4 years from now at this current growth run rate, Microsoft will be bigger than AWS if they keep this steady. So it's the gap is narrowing. Azure put out their number for the first time, but the backlog is really big. And the constraint was, they said largely energy, but I also have known from the onset, AWS did get a little behind in terms of volume of Nvidia. Some of that was based on its own chip, and I think they had a little bit of that sort of principal office moment in terms of getting the early capacity, but energy constrained, and it seems that somehow Microsoft has done a better job. But that bigger backlog could start to fill, a gap could fill, and their growth rate should accelerate.
All right, let's move to a company I don't care about at all.
I see this one in here, and this is just me talking my book, so I'll keep it really, really brief. My biggest personal position is SoFi. This company is revolutionizing fintech. It's one of the fastest hyper growth, and by the way, it's also like tripled in the price in the last couple of months. So, really, really glad I'm in that position. But they absolutely just hammered their numbers on every side: loans, fintech, growth. And of course, then right after they had this incredible beat and huge jump, they offered a $1.5 billion shelf that night. And that's basically, they diluted themselves. So everybody went crazy. Stock went down like 7% immediately, but then it got filled in. So it's clearly a lot of momentum here. I won't say much else because it's a little bit off the beaten path of our audience. But, I'm not making advice recommendations, but I would buy this stock. But I'm not recommending it. But I would buy it. But I'm not recommending it.
Yeah. Hey, let's move to Apple. It's funny.
You don't care about them, do you?
I do. They're Mag 7. One of the points I've been making on broadcast is, should they even be part of the Mag 7 anymore? From a market cap, yes. From a growth and excitement from AI, absolutely not. They had a very good quarter, particularly around iPhone. Management said about 1% of that was from the buy ahead. And I think if you look at the overall kind of 10% growth, that wasn't a lot. Macs really crushed it at about 15%. They had a new lower priced Mac that came out, and they got a lot of uplift from that. The second thing is they had 4% China growth, and everybody's like, "Oh my gosh, they figured out China." Here's what happened: Apple was included in the government programs that subsidized Apple for the first time. This is why it did well. It's because relations with China are thawing, and China's like, okay, we'll put them on the list as well. So they're down, and why are they down? For the reason that I listed in my tweet this morning, which is I know the entire market's down, but if you have your best iPhone quarter in how many years? Like 4 years? Shouldn't it be up like 10, 15%? Right? And then you've got the tariff piece. They're getting hammered. I believe that people are finally realizing that the tariffs are going to clobber them.
Yeah, I'm so Apple's by the way, it's set for a pop because like the minute they actually do something in AI, they will get a huge bump. But everything about it was just a value company. We're just doing good with our inundated embedded products. But the big thing was Tim Cook did open up the door about a possible being accretive and doing deals and leaning into AI. So he did say kind of what I think he needed to say, but now he's got to do some prove it. He's got to do some prove it. Or I like to say, over to you, Tim. You're going to have to figure this one out. But it was a good quarter for them. I mean, every Mag 7 company, except for Tesla, nobody cares about fundamentals anyway, did the business.
Yeah, totally. Are you shocked at all that they're down right now?
No, I mean, most stuff's down right now.
It
I think,
is, but I look at the comparison on the percentages of stuff. They had the best iPhone quarter than they've had in years.
yeah, well, RJ Reynolds sold a lot of cigarettes last month. That's comparable. I saw a lot of Jack Daniels. I mean, there's nothing in that. That's just, it's great that their core business is there, but the valuation already rewards that.
Yeah. Let's go to Microsoft. Pretty much a flawless execution here. I mean, not only did they had multiple beats, but their guide was huge. Satya took his 80 billion in capex and raised it to 120 billion. That was super impressive. For the first time, we got a peephole into the actual number for Azure, which was 75 billion at a 34% rate, a little less than twice the rate of AWS. $100 billion in bookings, right? That's up 37%. Microsoft invested early. They invested ahead. And now I'm kind of scratching my head, Daniel, on did they tell OpenAI to go find other cloud providers like Oracle and CoreWeave, or to make room for their own business? Or is this something else? And when I kind of drilled in there, there is some real enterprise demand, AI, and surprisingly to me, non-AI. We saw some huge numbers in Copilot. Not as big as ChatGPT, but remember, Copilot is really about commercial.
Yeah, this was all about Azure. That was why it popped. 75 billion, 39% growth, outclipped every other of the big three by a lot. And like I said, executing without infra of their own, and with the OpenAI partnership still in sort of a weird flux. But again, the stickiest moat in enterprise is Microsoft, and they're proving their wares. So very impressive overall quarter, and the thesis for the bull market and the AI stability has not been harmed by anything that happened in this quarter.
Yeah. Meta, absolutely astounding. And if there's any company that puts the exclamation point on downstream impacts, positive impacts from AI expenditures, it is Meta. They're the clear leader in this, where what they're doing is driving stickiness in the platform and adds up gigantic. They increased CapEx even more. They talked about 5 gigawatt Hyperion data centers, just an absolute machine. And we still haven't even seen the impacts of them money whipping all these researchers out there.
It's the New York Yankees of AI. They're buying the trophy, but there's a trillion. It's spending a few billion to create a few trillion. It actually makes a lot of sense. It's not for sure. And again, the Yankees didn't always win, no matter how much they spent. But that's what's going on there. But yeah, best application of AI in the business. I was asked on Bloomberg to pick between Microsoft and Meta and it was a hard one, especially after Microsoft delivered. But I still think Meta is the king of AI right now.
Some highlights for ARM. So first and foremost, they had a really good quarter. The guide is what got people, but the thing you need to focus on in the guide, it is invest ahead for CSS, meaning they're getting more designs that were going to yield a lot more high profit dollars down the line, but they're investing more. The number one interesting thing though that came out for me were, without saying it, Rene Haas essentially said they're getting into the chip business. He didn't say it, but he came, down to the 1 yard line, not in the end zone, 1 yard line from saying that he's going to do that. And net, if successful, that would drive revenue huge. Revenue selling chips versus IP is a lot higher. Percentage on the margins are lower, but the margin dollars are significantly higher. And they've got to wade through selling their own chips if they do this with giving room for their current IP customers to differentiate.
I think the company's so embedded and so sticky, it has some latitude. And yeah, could this push some people to RISC-V? Sure, it might happen. But ARM is still the dependable IP provider for so many critical chips. And I think the pressure for CEO Rene Haas is to grow it faster, grow margins faster. Because remember, this thing trades at like a very high valuation, $4 billion in revenue, and it's trading at like 150 plus billion in Val. And he needs to grow faster. And AI he's adjacent to AI, like CPUs for AI, but like getting directly in and playing that game is a big market opportunity. And I think they have enough asymmetric power over the current licensee and those that use its technology. And I think it also feels it can fill a gap that exists there and being the partner to help develop chips. So I think it's the right move.
Dan, they have 50% share now in data center without latest Nvidia that's all ARM in there.
Yeah, that's what I said. Like, I think they can pull this lever if they want. And, it's like, we dare you to go somewhere else. We'll see.
Exactly. And we really haven't seen any of the Stargate yet. But anyways, final topic, Qualcomm. Dan, how did they do? How did the market react?
I mean, the market just won't give Qualcomm a break. Quarter after quarter, beating 15% growth outside of without the Apple number in, 10% or so with that number. We all knew that was kind of moving away. Strength in the IoT, the automotive portfolio. So overall, like I said, a good performance by the company. This is one of those and we know Cristiano well, respect him very much. Like, I think this is like a showman moment for this company, though. Like, it's a little bit like Apple and handsets. Like, people are just like, what is next? Where does, they're in this autonomy. I keep saying autonomy for vehicles, XR, IoT and physical AI, SoCs for mobile. I just keep thinking like they need to be like the robot company. Like, they need to be the future of robots and autonomy, sort of change the narrative, what the company leads with, because it just trades at such a it's treated like an old value, antiquated licensing and IP and handset company, and people are waiting for something more. So I think there's like this kind of showman, this Musk kind of moment where Cristiano needs to come out and tell a story that's like 5 years into the future, and how maybe Optimus will be the $30,000 robot, but with all the technology that sits inside of the stack at Qualcomm, the billions of $5,000 robots that are going to be sold in China and everywhere else are going to be powered by Qualcomm. Model that out, analysts. That was my bet. That's what I said on Bloomberg.
Market wants data center infrastructure or AI growth now. Qualcomm's in a tough spot. They discussed data center in Middle East, and then Cristiano had some words about revenue, when revenue will hit fiscal 28, 27 calendar. We are seeing AI lift in smartphones, evidenced through ASPs and premium growth. It's not huge. It's not a super cycle. And the market doesn't see that currently as interesting. I think the market is, I agree, Dan, they are missing that big picture on the robotic edge. And what Qualcomm needs to do is get a robot on stage, announce some design wins with companies that people view will be winning into the future. We did see some evidence of this with Amazon and some of the robots. If you remember at their last event, one of the walk-on videos was Amazon talking about a robotics edge. And then we saw Amazon that said, we've got 1 million robots out there. We're the biggest company on the planet with the most robots, but that has to be put on there. Finally, they need to give details on their data center products. Otherwise,
Agreed.
people aren't going to believe anything.
Good call out. That's a good call out. I didn't talk about that, but yeah.
So, folks, thank you for this. We're on, an hour and 8 minutes. Appreciate you hanging in there. Hit that subscribe button. Have a great week. We appreciate you. Hit Dan or I up on X. We spend a lot of time on there, and that's where to get our quick takes. Take care.